When you're thinking about making an investment in an EB-5 project or evaluating an EB-5 project, I think that one of the most helpful ways to look at it is in two key categories of risk. As an investor, when you're applying for an EB-5, you submit an I-526 form. Within your form, there's two different portions. One is the project itself, and the second half is about you, the investor, in your source of funds. Some of the key benefits that you get with investing in an exemplar approved project is that USCIS has already reviewed this project. So they know it's compliant and they should defer to that prior approval when looking at your application.
You want to be in a project where construction, is well underway. And ideally, it's a project where, there's enough construction spend already that's happened so that enough jobs have been created so that that when you sign up, there's basically enough jobs for you to be allocated at least 10 jobs going in. There's a specific USCIS regulation around bridge financing. And so if the project's been structured correctly, then it's going to be able to count jobs from the very beginning through the entire term of the project.
When you're thinking about the project from the financial side, the first thing that should come to mind is the capital structure. Where is all the money coming from to complete the project? What you don't want to get into is a situation where you have a project that's conceptually there, but there's no actual financing in place.
Most projects that are out there are structured as real estate projects. Real estate development has assets as collateral, and it's fairly easy to understand their exit strategy. Typically exit strategy for a real estate project means the building's going to get built and then, it's going to get leased up and stabilized. And then it'll either be eventually sold or refinanced. It's not so much a question of, is this strategy even possible? It's more of, is it realistic under basic economic principles, right? You're gonna build the building for $80, and then once it's done and stabilized and finished, you're gonna turn around and sell it for $100.
Many EB-5 projects have certain guarantees built in. Now, when you make an EB-5 investment, it does have to be at risk. And USCIS has a definition of that, but it does not mean that it has to be extremely risky. So there can't be a guarantee of repayment, as in the cash just sits there, but there's a lot of things that can be put in place to help with the security of that investment.